Good morning, everyone. Good morning, Sanjay. So today we begin Ind AS 113, that is fair value measurement. Uh, one of uh, one of the most important standards from Ind AS perspective, because what happens is at every juncture in any session that you discuss or in any standard that you see, there is a lot of reference that is made to fair value. And you would also have learned that Ind AS is an attempt to move towards a fair value based accounting. And I know that currently you people are still to resume Ind AS 109 and 107 and 32, which deal with financial instruments. There you have ample, what you can say, applications of fair value. Similarly, in business combination also you have fair value implications. And of course, in all other previous standards also, we have seen fair value at different junctures. So somewhere this is an attempt, this regime attempts to introduce a fair value concept in accounting. And that is why it becomes critical from an application perspective as to what is fair value and how do we measure it. Since each of these standards give an explanation of fair value or prescribe fair value, the standard setters felt that instead of putting fair value description in each of the standards, it would be better to carve a separate standard so that whenever you talk about fair value, they will refer to the fair value as prescribed under the particular standard. And therefore, IFRS 13 was born, out of which Ind AS 113 has been, adopted. So that is your background. Did I have a similar standard or a corresponding standard under the AS regime? Answer is no, because that was primarily accounting based on historical cost. Though you had certain references to valuations like revaluation for property, plant, equipment, etc., but those were restricted in their applications. Otherwise, it was largely a historical cost-based model, and that is why you need not have a separate fair value standard. So this is a totally new standard. You do not have any precedence in the previous regime. Okay. So now, when we talk about fair value measurement or when we talk about fair value, this very term fair value has lot of significance under the current regime. It has a lot of importance. फेयर वैल्यू की जब हम बात करते हैं, when we talk about the term fair value, it is a very specific value. It's not some XYZ value that you can just pull out from the sky and put in your financial statements. It is a very specific value. It is having a very specific computation methodology. So therefore, it is a computed value. It's not some XYZ value that you just pull it from the air. It's a computed value. It's not any random value. And computation of fair value is not simple. Computation of fair value is not simple. For example, let us suppose you are having investment in equity shares other than subsidiary, associate, joint ventures. So the standard on financial instruments requires you to take the investment in equity instruments at fair value. Now, when we talk about investment in equity instruments at fair value, which fair value will I take? Suppose they are market values. Suppose they are quoted instruments, quoted equity shares. Then, sir, we'll take the price quoted on the stock exchange. Now, which stock exchange? Will you take the Bombay Stock Exchange or will you take the National Stock Exchange? Because my shares are quoted on both. So it's not exactly for anybody who is applying the principles of Ind AS 113 the first time, and he will start saying which fair value do I take. It represents, so suppose if he comes with the thought process, fair value nothing but the market value. Which market? Should I take the NSE? Should I take the BSE? That is one question. Now, similarly, if I have to determine the fair value of land which I am holding, how do I determine it? Should I go for the stamp duty valuation adopted by the registrar? Should I go for the valuation of land in the vicinity that is surrounding my plot of land? Should I go for any other valuation? Should I go for the valuation based on the last sold property in this particular area? What is the methodology that I should adopt for valuation of land? Okay, so that is one more example. Another example. Suppose I am in the business of I want to sell off one of my divisions. That divisions, suppose I want to sell off my agricultural division. Agricultural division comprises of my farmlands, my inventory of those farmlands. So suppose I have grape vineyards. Okay, I'm in a place like Nasik, I suppose. So Nasik is a place where you grow grapes probably. So I want to sell off my agricultural setup in Nasik. So it includes, all my equipments, plant, machinery, the plantation itself, the orchards, the grapes that are there, any inventory associated with those grapes, and any go down or shed or whatever you call it. So I'm selling it as a division. So that comes under Ind AS 105 purview. That is non-current assets held for sale and discontinuing operations. So now I'm disposing of this entire unit. Now, in that case, those grapes, I should be fair valuing them. How do I determine the fair value? Sir, fair value is the market price. So my grapes, I sell something in export also, something in India also. Export has some value, India has another value. So which value should I assign to determine the fair value? Again, it's a question mark. Again, it's a question mark. So in each of these cases, you cannot just simply come to a conclusion that fair value equals market value. No, because when you talk about fair value being equal to market value, obviously next question arises: which market, where, why, how? So all these questions arise. So what Ind AS 113 attempts to do is, Ind AS 113 attempts to give you a methodology to compute fair value. Ind AS is not like a standard which churns out fair values. Okay. So you cannot say that, okay, here is my inventory. I will pass it through the Ind AS 113 test. And at the end of Ind AS 113 test, I will get the fair value of my inventory. No, that doesn't work with Ind AS 113. Ind AS 113 is not a magic stick that you can wave around and suddenly your fair values come into existence. No, Ind AS 113 is a principle-based approach to determine the fair value. It gives you the principles 1, 2, 3, 4, 5, 6. Based on those principles, how is fair value going to be determined? And it is a very flexible manner of computing. Okay. It gives you various scenarios. In this scenario, you compute like this. In second scenario, do like this. Third scenario, do like this. So it is not rigid, so to speak. At the same time, it is not arbitrary also. It is not arbitrary, but it is not rigid. It comes with flexibility. At the same time, it comes with a rationale. Rigidity opposite is flexibility. Arbitrary opposite is giving a giving a rationale. Just a minute. So that is Ind AS 113 for you. Okay. It gives a methodology. Suppose I have invested in unquoted equity shares. Okay. I have invested in unquoted equity shares. Many companies do invest. Okay. You have investments pre-IPO. Companies want to make listing gains. So they invest just before a company goes into IPO. You have private equities which invest in unquoted equity shares because the companies want to grow big and these companies want to make money out of it when the listing happens. So in all these cases, the point is that you as an entity are holding unquoted equity shares. Now, how will I value them? How will I value them? Unquoted shares do not have a market price. So which formula do I use? Should I use William Sharpe's capital asset pricing model, CAPM, which you would have studied? Yes. You need to know the risk-free return. You need to know the market return, the difference multiplied by the beta. So what is the beta of an unquoted share? That to that output you add it to the risk-free return. So that will give you some valuation. Should I adopt the capital asset pricing model? Should I adopt the Gordon's formula, the discounted cash flow methodology? Which should I follow? That is what Ind AS 113 tells. It does not tell you use this formula or use that formula. In fact, in Ind AS 113, as we study, you will see nowhere has it prescribed the usage of a particular formula. It gives you, as I said, principles to compute the fair value. And basis that you will have to determine. Basis that you will have to determine. Okay, so with this background, we begin the discussion of Ind AS 113. So normally you have assets and liabilities exchanged between parties at their agreed terms and conditions based on the prices, which in some cases might not be at arm's length. Okay. For example, it could be reduced prices, or it could be reduced interest rates, or it could be longer credit period. All these, which is a deviation from the market, clearly it becomes a transaction which is not at fair value. These are what we commonly call as entity specific prices. For example, I have a wholly owned subsidiary. I have a wholly owned subsidiary and I'm giving it, I have incorporated it to carry out operations of a different sector compared to the parent. That is why I incorporated. For example, the parent is largely into hospitality and the subsidiary would venture into transportation and transportation industry. Okay, that is movement of passengers, etc., etc. So in these cases, to enable the subsidiary to carry out operations, the parent gives an interest-free loan without any repayment defined, without any repayment tenure defined. Okay, no tenure, no interest rate, nothing. Is this transaction at fair value? What do you think? Is this transaction at fair value? Giving an interest-free loan to a subsidiary, is it at fair value?
No.
It won't. Why did I give? Because वो मेरा ही company है. It is my wholly owned subsidiary. That is why I have given it at no interest conditions, nothing. No conditions attached to that loan. Okay. And that is why it is not, you can say that it is not at arm's length. If I had to give same money to a third party, maybe I would have charged 8 to 9% rate of interest, which is the current market interest. Okay, so this is an entity specific price. It is a price between a parent and its wholly owned subsidiary. Parent and its wholly owned subsidiary. So therefore, it is specific between the two entities, which is not a representative of the market. Do you agree? Yes, it is not a representative of the market. तो इसको हम लोग क्या बोलते हैं? What do we call this? We call it as entity specific pricing. We call it as entity specific pricing. Can I take fair values based on entity specific pricing, or should I take it based on market based pricing? What do you think?
Market-based pricing.
It should be based on market-based pricing. Okay, the fair valuation is based on the market value. Okay, so to define fair values, it should be ensured that the values reflect all assumptions to change from transaction specific to a normal transaction. So when you have a transaction which is not at fair value, which is an entity specific value, you will convert it from entity specific to transaction specific to market specific values. You will do the conversion. You will study, for example, in Ind AS 109, a lot of questions are based on this principle that I am entering into a transaction which is not at fair value, and Ind AS 109 requires you to do a fair valuation. Example in case interest-free loans given to employees. Interest-free loans given to employees. Is it at fair value? Answer is no. But Ind AS 109 tells bring it at fair value. Any differential that is there, you will study. That will be nothing but employee benefit expenses, which will be over the tenure of the loan. Over the tenure of the loan. Are we okay with this? Yes. So basically, you have to convert entity or transaction specific scenarios to a market based scenarios. You eliminate all those riders, you eliminate all those clauses, you eliminate all those conditions which are specific to a transaction, and you introduce conditions which are common in the market perspective, and that is what is going to be your fair value. That is what is going to be your fair value. So when we talk about fair value, it should be from the perspective of market participants. That is, it should be typically at arm's length prices instead of it being transaction specific or entry specific. So what we talk about fair value is nothing but essentially it talks about a market based value. Are we okay till now? Yes?
Yes.
Okay. So this again we discussed. Ind AS regime brings about a shift in your accounting perspective. Earlier, it was primarily cost model of accounting. You had sparse applications of fair values like revaluation of assets. Karte the, so for that reason, you would be defining what would be the revaluation and what would be the valuation in AS 10. It would in AS 10. That is all defined there, but you don't have a separate standard for fair value measurement. Okay. Ind AS talks about fair value model of accounting, whether it is 109, 105 or Ind AS 40, where you give a disclosure of the fair values. Okay. If the guidelines were not there, that means if Ind AS 113 was not there, your true and fair view of financial statements will not be achieved because there is no standardization of fair value. One entity will take market value, another entity will take XYZ value. Suppose I have invested in quoted equity shares of the same entity and another party also has invested equity shares of the same entity, but he takes a BSC value, I take an NSC value. Thoda difference रहता है. A couple of paise का difference रहता है, but difference is going to be there. Yes, and therefore it becomes critical for us to ensure that my true and fair view of the financial statements does not get vitiated in absence of guidance. And that is why you have Ind AS 113. Okay. So when we talk about objective and scope of this standard, when we talk about why the standard is introduced and what does it cover, well, it tells us the definition of fair value. Ki bhai, what is fair value? It gives in a single Ind AS the framework for measuring fair value. So जहां जहां पे आप fair value देखोगे in the entire Ind AS regime, wherever you see the references to fair value, it will refer back to this particular standard. So there is only one standard in one place which gives the framework for measuring the fair value. So you come here, see the framework for measuring and apply it in the respective scenarios. And it also has requirement to give disclosures. It also has requirement to give your disclosures. So these are the objectives of Ind AS 113. When we talk about scope, we come into two parts, applicability and non-applicability. Applicability, when another Ind AS requires or permits fair value measurements and measurements such as fair value less cost to sell based on fair value or disclosures about those measurements. So clearly, Ind AS 113 itself will not talk about it needs fair value. No, Ind AS is a supporting standard for all other standards. Ind AS 113 is like a trunk. The trunk is the foundation. Basis the trunk, you have various branches which represent your various standards. Okay. So when Ind AS 109 talks about fair value, it has to come back to the trunk to see what are the foundation stones or what is the pillar for determining the fair value. So that the branch of Ind AS 109 comes out to be in a healthy manner. Are you able to connect? Yes. So therefore, your applicability when another Ind AS requires, that time you follow. For example, Ind AS 109 will require how to measure fair value will be told by Ind AS 113. How to measure will be told by Ind AS 113. When you talk about non-applicability, there are two scenarios. One, measurement as well as disclosure, both of them, samuhik, it is not applicable. Okay. Measurement is defined under that particular standard. Disclosure also is defined under that particular standard. So what is that case? Share-based payments under Ind AS 102. It is defined in Ind AS 102. तो यहाँ पे नहीं आएगा. Lease is under Ind AS 116, again defined in that respective standard. Measurement similar to fair value but not fair value. For example, NRV in Ind AS 2 or value in use in Ind AS 36. NRV talks about what? NRV talks about selling price less cost to sell, right? So it appears to be fair value. But it is not. Same goes for value in use. Okay. So for this measurement as well as disclosure, matlab Ind AS 113 for these two standards, measurement and disclosure both do not apply. Whereas for these standards, only disclosures do not apply. Measurement applies. What is that? Plan assets at fair value. This is Ind AS 19. Ind AS 19, we know what are plan assets. So I will have to measure them at fair value. So therefore, that becomes one of your standards where measurement is covered under 113, but disclosure goes under that particular Ind AS 19. Okay. Assets for which recoverable amount is fair value less cost of disposal as per Ind AS 36. So in this case, fair value, that becomes your criteria, that becomes your requirement for which you fall back to Ind AS 113. But disclosures will go under Ind AS 36. Are we okay with objective and scope? Yes.
Yes.
Leela, Bibhu, are you okay?
Sir. Okay.
All right, fine. So with that, we move on. So you have certain examples like Ind AS 105. You measure items at fair value less cost to sell. So here you have fair value. Ind AS 109, for financial instruments, you follow FVTPL or through other comprehensive income, but it is at fair value. So therefore, your fair value as required under Ind AS 109 gets covered. Property, plant and equipment measured using revaluation model as required under Ind AS 60. Revaluation model means you have to take it at fair value, so you come here. Biological assets measured at fair value under Ind AS 41 for biological assets. Have you guys studied Ind AS 41?
Yes.
Yes. So what is the requirement in Ind AS 41? What is the biological asset? What is a biological asset? Bolo yaar.
Plants, animals.
Plants, animals, and technically you are CA students. You are not Aam Aadmi. Okay. So what is a biological asset? It is any living animal or plant that is controlled and managed by an entity. Yes. question arises how to value. Okay, suppose I buy, acquisition cost becomes the cost. But every year, do you think the value of the livestock remains the same? Answer is no. It will change. It will change. At the same time, suppose cow gives birth to a calf. Calf is something which you have not paid and acquired, but now it is there. So you have to take it at fair value. So this is what is specifically covered in Ind AS 41. Okay. In all these standard examples which we have given, there is a requirement of fair valuation, and that requirement of how to measure fair value is met by Ind AS 113. Okay. So now we come to the standard proper. Ki bhai, what is fair value? What is fair value? And here it is where things will start getting technical. Okay. So now it is a very beautiful definition of fair value that is there. It's a very nice definition, a very comprehensive definition, and yet a very simple one at that. Okay, so they have achieved simplicity as well as comprehensiveness. Okay, so when we talk about fair value, it is the price that would be received to sell an asset or paid to transfer a liability. So it is a price on sale or transfer of asset or liability in an orderly transaction between market participants at the measurement date. Are we able to follow? Yes. Are we able to follow? So when we talk about Ind AS 113, it is the price received or paid on. I receive on sale of asset, paid on transfer of liability. Paid on transfer of liability. Number one. Next. It is a price that would be received to sell or paid in an orderly transaction between market participants. Between market participants in an orderly transaction. In an orderly transaction at the measurement date. At the measurement date. And these transactions we will study later must happen through an appropriate market. Okay. So these are the 5 key pillars of Ind AS 113. The first pillar, it is the price received on sale of asset or price paid to transfer a liability. That means what can I interpret from this? Price received to sell an asset. So suppose I hold building and I want to determine the fair value. It is the price that would be received on sale of building. That means it is talking about exit price. That means it is talking about exit price. Are we able to follow? Yes. Are we able to follow?
Yes.
Yes or no? Dibhu, Leela?
Yes, sir.
Yes, sir.
It is the price that would be received on sale of asset. That means your thought process should be as if you want to exit investing in that asset. You want to give up the holding of that asset. So it becomes an exit price or price paid to transfer a liability. Can anybody tell me what do you mean by transfer of liability? Can anybody tell me what is transfer of liability? Thoda socho, think about it. Yes.
In case of demerger or
In case of,
amalgamation,
okay. Give even more simple example. Na? Think about it. See, suppose as a company, I have issued debentures and I got 1 crore on issue of debentures. Now, there is another company which wants to raise funds. There is another company which wants to raise funds at the same time. At the same time, because it wants to raise the funds, it doesn't want to get into the line of operations where they have to go make a DRHP, etc., 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 do all the nasty and hard work they do not want. They are on the lookout. I, as an entity, I already have the debentures which are issued. Now, my question is, can I, as an entity, give money along with debentures to the other entity? Answer is yes, if my debenture holders agree. If my debenture holders agree. Yes or no? Bolo. Yes. Is the example clear?
yes, sir.
Giving debentures
See,
for what?
there is a company A Limited. A Limited issued debentures worth 1 crore and got money in its account worth 1 crore. Is this position clear?
Yes.
Yes. Now, there is another company, B Limited. B Limited wants to raise the funds. A Limited has already raised the funds. A Limited's business has kicked off so well that it does not really need the debentures now. B Limited wants 1 crore of funding. Now, if it has to go again, into the market to issue debentures, it will be a tedious process. Yes or no?
Yes.
So what B Limited will do is B Limited will contact A Limited and say, Dekh bhai, I need money. I said, okay. So now you give me your debentures. Okay. Badle mein, you give me your debentures along with the money. Then who will repay the debentures? B Limited will say, you don't worry, I will pay the debentures. The debenture trustees will automatically include me also. The debenture trustees will automatically include me also towards honoring the commitment of the debentures. And therefore, what happens is A Limited will move these debentures here. Here. So now B Limited gets debentures worth 1 crore. The question that arises now is, when your debentures are worth 1 crore, will I pay full 1 crore or will I pay something different from 1 crore? If I pay something different from 1 crore, will it be higher than 1 crore? Will it be lower than 1 crore? What do you think? Will it be higher? Will it be lower? Will it be at the same price? What do you think?
I think it would be a bit higher.
It could be a bit higher is one response. What about the others? Leela, what do you think?
Yes, sir. It could be higher.
It could be higher. Okay. Why do you people say so? It could be higher?
Because it has saved money on issue.
Which is exactly why B Limited will not pay 1 crore, na? Yes or no?
Yes.
See, B limited will tell A limited. This is another line of thinking. I'm not saying it will be more, it will be less as the rule. This is another line of thinking. B limited will tell A limited, or rather A limited will tell B limited, look, here is my debentures worth 1 crore. I have done all the weightlifting. I have done all the weightlifting. Sir, kaun sa weightlifting? I actually went to the public. I brought in underwriters. I made a DRHP. After making a DRHP, I went to the public. I issued the debentures. I got money from them. My secretarial team did the allotment. After allotment, whatever excess was received, we refunded that back. And ultimately, whatever was there, we pushed it out to our debenture holders. Yes, we pushed it out. We pushed the debentures to our debenture holders. So this entire process is weightlifting I have done. This entire process is weightlifting I have done. Now, you want to enjoy entire 1 crore without doing any of these activities. You want to enjoy the benefit of 1 crore without doing any of these activities. Are you able to follow?
Yes.
Yes. So now you tell me, for A limited, will it be better to transfer the debentures at 1 crore, lower than 1 crore, or more than 1 crore?
More than 1 crore.
Think about it. Okay. I will add one more. Suppose these debentures have a life of 8 years. The request from B Limited came at end of 5 years. That means 5th year. At end of 5th year. Now tell me, A Limited has to pay something to B Limited before maturity. Yes, it has to pay something to B Limited before maturity because I'm transferring the debentures. Now you tell me, will it pay more or will it pay less than the value? सोच के जवाब दो.
So it will pay less than the value.
It will pay less. What about you, Sanjay?
Yes, less, because
It will pay less. And that is logical. That is logical because I didn't use the money for the full tenure, number one. Second, I did all the weightlifting. Counterparty has not done anything. So I should get that benefit, right? I should get that benefit. And therefore, what is the situation now is, A Limited will pay 97 lakhs. 97 lakhs. You tell me, is the liability extinguished or is it still alive? Is the liability extinguished or is it still alive?
It is still, sir.
It is still alive, right? Abhi bhi zinda hai wo. Leela, are you having any doubts?
No,
Sanjay? Sanjay, clear?
not clear, actually.
Dekho. Where was the liability initially? In the books of A Limited. Correct?
Yes.
At the end of 5th year, where is the liability gone?
B Limited.
B Limited. But are they extinguished? Extinguished ka matlab, is the liability paid off?
No, actually, yes.
No.
That I got. Yes.
The debentures still are surviving in the market.
Yes.
Right?
That's
When
right.
does it get extinguished? When the debentures get redeemed. When the debentures are paid off and the debenture trustees say, fine, you have redeemed the debentures, you have honored your commitment. Until then, this liability is only moving in the market. This liability is only moving in the market. इसको हम लोग बोलते हैं transfer of liability. We call this as transfer of liability. What A Limited did was, A Limited transferred the liability to B Limited and paid 95 lakhs, suppose. 97 lakhs. Are you able to follow?
Yes, yes. Now clear.
When I buy an asset, when B Limited buys an asset, it will pay for that asset. But when B Limited buys a liability, so to speak, it has to get money also for that liability, because ultimately now the debenture trustee will say, will it go to A Limited? Answer is no, because debenture trustee has said we will go to B Limited at the end of maturity period. Are you able to follow?
Yes, yes. The debentures and the bank both goes to be lifted. Now got it.
Yes, exactly. Exactly. So we call that as a transfer of a liability. Now, from A's perspective, from A Limited's perspective, can I say that A Limited has paid an amount to B to transfer a liability? Yes.
Yes.
Leela, are you following? Bibhu?
Yes, sir.
Yes, sir.
So now you come to this definition. It is the price received on sale of an asset. This is very clear to everybody. Or it is the price paid on transfer of liability. So A Limited has paid 97 lakhs. That is the meaning of this. Are we totally clear about this?
Yes, totally clear now.
Yes,
Now
all
clear.
right. So liability is not getting extinguished. It is only moving from my books to somebody else, and I'm paying it. So when we talk about price received on sale of asset or price paid on transfer of liability, can I say that in both these scenarios, the intention is to give up an asset or give up a liability? Yes or no?
Yes.
And therefore, to give up an asset or give up a liability, it means the price that is being spoken to here is an exit price. Can you agree to this?
Yes.
Yes. From A Limited perspective, it is an exit price only, na? Because you are talking about it from the perspective of A Limited who wants to sell the asset. So sell the asset means give up the asset. So he wants to exit from the asset holding, or he wants to exit from the liability, or he wants to exit from the liability. Are we clear about this?
Clear. Very clear.
Yes. So it becomes an exit price. It becomes an exit price. Okay. Now the question arises. Suppose, let us talk about a company like SBI, for example. Okay, let us talk about SBI. Now, SBI has various portfolios, right? It is having a housing loan portfolio, a vehicle loan portfolio, gold loans portfolio, XYZ. So many portfolios it has. Each portfolio has its own set of employees, has its own, let us assume, has its own assets also. That means housing loan is dealt with by a separate branch. Vehicle loan dealt with by a separate branch. And gold loans are dealt with by a separate branch. Now, SBI decides to sell its gold loan division. SBI decides to sell its gold loan division. SBI is thinking, मैं क्या करूंगा gold loan का? Yes, unnecessary. I have to invest in vaults to protect the gold. So let us come out of the gold loan business itself. So it wants to dispose of that entire gold loan division. Gold loan division में क्या आते हैं? Employees of the gold loan division will come. The gold loan accounts, the gold inventory or the gold stock which it has as a security for these loans, that will go. Any related property, plant, equipment for these gold loans that will go. So all these put together, they form the gold loan division of SBI. Now, when SBI, so when I'm selling it off, Ind AS 105, you have to determine the fair value. You have to determine the fair value. Now, when I am disposing or selling of the gold loan division, suppose it wants to sell it to Muthoot Finance or Manappuram Gold Loan Hub or whatever it is. Okay, in South you have these 2-3 big companies. Okay, they specialize in gold loans. So SBI approaches them to sell. Now, SBI must do a fair valuation of the items in the gold loan division. One of those items is the jewelry. One of those items is the jewelry. Okay. Now you tell me, what will be the price for that jewelry? What will be the price for that jewelry? Let us suppose, very simple. I'm just adding some pointers. Suppose all my customers did not pawn or pledge their jewelry, but instead they pledged gold coins or gold bars. Okay. So one, it is not jewelry. So necklace, earrings, rings, bangles, not these, but physical gold coins or gold bars. Okay. I'm keeping things simple so that you can appreciate the nuances of Ind AS 113. So when it goes to Muthoot or Manappuram Finance, and when they want to value the gold loan portfolio, which they are now getting along with the assets, what will be the valuation for the gold which is pledged with SBI? Will it be the commodity market price? Will it be any other price? How will you determine the price? Or what will be the price in this case? Will it be same as the commodity exchange price? It is a pure gold bar, a 24 karat gold bar. Yes. So now you tell me, how am I going to price it? How am I going to determine the value of it? What do you mean by current market price? Yes, go ahead, Sanjay.
Yeah, commodity market price.
Commodity market price on the commodity exchange. Okay. You just do one small activity if you can. Okay. If you have a 1 gram of gold coin. Okay. Or even if you don't have it, is fine. Someday, just walk into a Tanishq store and ask them, I have 5 grams of gold with me. I want to make earrings out of it. What is the rate that you will give me for this gold coin? A 24 karat pure gold coin. The answer that will come from the other side is, sir, we will deduct 2% of the value of the gold, and that is the benefit that you are going to get. If you don't believe me, you can go to Tanishq or any jewelry store for that matter. They will never give you the price of the market. Do you agree to this?
Yes.
नहीं देंगे वो, because that is the profit margin which they are making on the gold, right? That 2%, they call it XYZ name, but essentially it is the spread. Essentially it is the spread which they are having. Are you able to follow? Yes.
Yes.
Leela, Bibu, are you able to follow? Yes.
Yes, yes.
Yes, sir.
All right. Now, suppose SBI, now I come back to our example, SBI sold the gold portfolio to Manappuram. And now SBI thought, what a mistake I did. Gold prices are going up. So I should have held the gold, because then I could give more and I could make more interest. So SBI goes to Manappuram Finance again and tells, look, I sold the gold loan portfolio to you. Now I want the gold loan portfolio back. The same accounts, the same gold, everything the same. Do you think Manappuram will sell at the same price at which it bought from SBI, or will it be a different pricing?
Will
It
it
will
be
be a different price.
थोड़ा फर्क रहेगा. There will be some difference, right? There will be some difference. Assuming, even you assume that gold prices have remained flat from the date of sell to the date of buy. Assuming gold prices have remained flat, in spite of that, you as an entity will not get the same price for that gold which you had received, which you had paid when you had sold it. Yes, because that differential is the markup. That differential is the markup that they are interested in, right? That they are interested in as the selling entity. Are we okay with this? Yes.
Yes.
So therefore, the first part is it talks about an exit price. It talks about an exit price. In a transaction between whom? Market participants. In a transaction between market participants. Okay. Now, let us suppose, let us suppose I own a plot of land. I own a plot of land. Okay. This plot of land is a converted plot of land. Converted matlab kya? It was an agricultural land long time back, but ever since I purchased, it has ceased to be a non-agricultural land. It is a special commercial zone property. Okay. You have various zonings in your cities, right? Vibhu, Sanjay, Leela, you would be aware of the zonings. There would be settlement areas. There would be orchard zone or green zones where development is prohibited. There would be special construction zone where floor area will be FAR will be 100%. Special commercial zone where it will be 300%. In bigger cities, it can be 1000%, 1300%. Because why? Because essentially your in bigger cities, land is a scarce entity, is a scarce commodity, and therefore they permit you to build those skyscrapers, 40 floors, 50 floors, 60 floors, and that is why your FAR becomes very high. So in all these cases, your plot of land is capable of uh, any of these activities, is capable of any of these activities. You can either build a residential complex, you can build a commercial complex, you can build a commercial tower, yes, where you give that office spaces on lease to big corporates, right? So anything could happen there, anything could happen. Now, as an entity, let us suppose that my expertise, I'm a real estate developer, my expertise is into constructing residential projects, right? At the same time, the plot of land also supports commercial project development. My expertise is residential, but the plot of land supports commercial development or commercial exploitation of the land. Residential use implies the land has a value of 1 lakh per square meter. It has a land of 1 lakh per square meter. Tell me, commercial land will be at a lower rate than residential or higher rate than residential?
Higher than residential.
Higher. So suppose the commercial value of the land is 2,50,000 per square meter. So the land which I am holding for residential purposes, it is 1 lakh per square meter. Whereas for commercial use, it is 2.5 lakhs per square meter. As an entity, my expertise is only residential projects. My expertise is only residential projects. Now, suppose I want to fair value this land. I want to fair value this land. Okay, that is the commercial land. The question that arises is, what should be the price that should be considered? What should be the price that needs to be considered? Right? Do I consider 1 lakh because of what I can do to the land? Or do I consider 2.5 lakh because anybody can come and build commercial plots, commercial projects on this land? What do you think? What do you think?
2.5 lakhs.
2.5. What about Leela and Bibu? Understood, not
2.5.
understood. 2.5, right? So, why are we saying 2.5 and not 1 lakh?
Because someone could come for and build some commercial space, commercial building. So for that
Yes.
reason,
Go ahead. Yeah. So for that reason. So even though I am incapable of building commercial projects, somebody else can come and use the land for commercial projects. So tell me, my inability to develop commercial projects, is it asset specific or is it entity specific or is it market specific?
Market.
My inability to build commercial projects, this limitation, is it specific to me as the owner or is it specific to the outside? Is it specific to the market? What do you think? My inability to build commercial
specific to the owner.
projects. It
Specific to
is
the owner.
specific to the owner. It is specific to the owner. Whereas the 2.5 lakh per square meter value, it is what? What is it? Is it specific to the owner or is it a market specific or a market determined valuation? What do you think?
Market specific.
Market specific. Market specific. And that is why when I have to do a fair valuation of this land, as all of you said, it will be at 2.5 lakh per square meter. It cannot be at 1 lakh because the land can be exploited to the tune of 2.5 lakhs. And that is why your fair value expectations also will start going up. Is it okay? Yes. Is it
Yes.
okay?
Yes.
Leela? Bibu?
Yes.
Yes, sir.
All right. Fine. So therefore, when I talk about Ind AS 11,
పిలిచి అడుగుతూ ఉంటారు. Okay, okay, okay.
so when I talk about Ind AS 113 valuation, it is always from a market participant perspective. It is always from a market participant perspective and not from the perspective of the owner. Not from the perspective of the owner, not from the perspective of the counterparty also. Suppose the counterparty is only a residential project developer. Will you still value the land at 1 lakh? Or will you say, that is your problem? You are a commercial project novice like me. Is not my problem. The land is capable of supporting commercial exploitation. And therefore, I will expect 2.5 lakh per square meter rate only. Not a single penny below 2 lakh 50,000 per square meter. Yes or no?
Yes.
Yes. So therefore, you are entering into transaction between market participants. You are entering into a transaction between market participants. All right. Now, how many of you have studied Ind AS 36?
Yes. Studied.
You have studied Ind AS 36. In Ind AS 36, have you studied something known as value in use?
Yes.
Yes. What is value in use?
Present value of future cash flows.
Present value of future cash flows. From whose perspective? From whose perspective? Who determines value in use?
Entity.
Entity owning the asset, right?
Yes.
So if entity has to determine value in use, it will be the cash inflows by putting the asset to use in the way the owner wants. Yes or no?
Yes.
So suppose in the above example, as a residential project developer, if I own a parcel of land and I have to determine the value in use, it will be with reference to 1 lakh per square meter and not with reference to 2.5 lakh per square meter. Are we able to follow?
Yes.
Yes, because value in use is not market specific. It is entity specific. Value in use is entity specific. Are we able to follow?
Yes.
Yes. So it is an exact opposite of Ind AS 113. It is an exact opposite of Ind AS 113. Okay. All right. Fine. So that takes care of the second scenario, that is market participants. The third scenario, in an orderly transaction. In an orderly transaction. All right. Do you remember the key elements of a contract? Yeah. Yes.
It should be in writing for a
Yes.
consideration.
Go ahead. Okay. For a consideration. Next. What else? See, when we talk about the elements of a contract, or rather the what you can call the barriers to a contract, or to a validity of a contract, right? You remember those cases: misrepresentation, coercion, fraud? Do you remember that?
Yes. Yes.
Yes. So misrepresentation, fraud, coercion, etc., these particular items vitiate the contracts. Vitiate the contract. That means what? They render the contract meaningless because it is executed under a particular threat. That could be misrepresentation, that could be fraud, that could be XYZ. All this is happening under the particular force, is happening under a particular force. So will the contract executed under those forces ever be true, or will it be prone to pressure tactics? What do you think?
Yeah. Pressure tactics.
It will be prone to pressure. Similarly, when I talk about orderly transaction, it is a transaction between market participants, and the transaction should be an orderly one. Orderly one means what? Orderly one means the buyer and the seller, both of them are a with a free mind. They are entering into this agreement. They are entering into this agreement. उसको हम लोग बोलते हैं orderly transaction. Sale of asset from one brother to another brother, assuming the brothers are amicable terms with each other. Genuinely bhai bhai hai. So when I'm selling one asset to another, from one brother to another brother, where bhaichara exists, right? Do you think it is an orderly transaction or will it be a non-orderly transaction?
Yeah, it would be a non-orderly transaction.
Non-orderly transaction. Sale between parent and son, will it be orderly or non-orderly?
Non-orderly, out of love and
Non-orderly.
affection, it would be,
Out
yes.
of love and
That's
affection,
true.
आप थोड़ा price के साथ you will typically end up compensating. You will typically end up compensating, right? So in all these scenarios, you are ending up with a transaction which is not an orderly one. But Ind AS 113 tells that is not permitted. When I'm determining the exit price in a transaction between market participants, it should be an orderly transaction. It should be free of bias. It should be free of any bias. Okay. And this is the value that I find at a particular date. At a particular date. इस date को हम बोलते हैं measurement date. We call this as a measurement date. Fair value is always a value at a point in time. Is always a value at a point in time. Fair value at 31st March. Do you have a concept like fair value for 2024-25?
No.
No. It sounds ridiculous. Fair value cannot be for the full year. Fair value is for a particular point in time. And therefore, it is at which point in time? At the measurement date. At the measurement date. And finally, it should be in an appropriate market. This is not exactly forming part of definition of fair value. Fair value definition is only these 4 points. Price received or on sale of asset or paid for transfer of liability in a transaction between market participants. Which transaction? Orderly transaction. When? At the measurement date. At the measurement date. Are we okay with this? Yes.
Yes.
Are we okay?
Yes.
Yes. So therefore, this is what makes up your fair value. This is what makes up your fair value. Now, when I'm entering into a transaction with market participants, all this is written down. Okay, so just listen. We will then run through the slides. Okay, fine. Till now, whatever we have discussed, let us run through that. Okay, so then we can come to the other aspects. Okay, so fair value. I told you it is market specific, not entity specific. Yes or no? Yeah.
Yes.
So fair value takes into account the characteristics of the asset or liability. In our example, the land is capable of commercial exploitation. So fair value takes into account that particular feature of the land. For example, the condition and location of the asset and restrictions, if any, on its sale or use. However, the conditions or restrictions that might be related to a particular entity should not be taken into account. As an owner, I have a residential project expertise. I do not have a commercial project expertise. That is in no way going to affect. That is in no way going to be considered, right? Because what we are talking is only characteristics of the asset or the liability. An entity shall measure the fair value using the assumptions that market participants would use when pricing the asset or liability, assuming that the market participants act in their best economic interest. Are we able to follow?
Yes.
Yes. Everything we have covered, nothing is left out, right? So rule, entity specific restrictions or conditions ignored, asset liability specific restrictions, etc. considered. Is all of this over? Yes.
Yes.
ये सब हमने किया था. Okay. So my advice, go through this for homework or do it right now. Read this. If you have any doubts, let me know. Read these two examples taken from your study module. Just give me a minute. Did you go through the examples?
Yes. Yes.
Quite
Understood.
simple.
Yes, simple.
Yes. Leela, Vibhu. Yes.
Yes, understood, sir.
Understood. Okay. Nothing different from what we have covered. Okay. The next aspect is unit of account. Now, what do you mean by unit of account? See, many times what happens, it is not just a single asset or a single liability that I am going to sell. Many times what happens is an entire division also goes. Okay, an entire division also I'm interested in selling or discontinuing. Like in our example, SBI gold loan portfolio. which includes customer accounts, employees, the building where the gold loan is housed, the vault, the physical gold pledged by the customers, all of that put together is what is going to get transferred in our example. Okay. Um, Suppose I'm interested in demerging certain, what you can say, I'm interested in demerging the entire business, a business unit. That is going to be fair value. So what happens is varied circumstances, varied requirements. In some cases, I may be interested in selling only one asset or transferring only one liability. So in that case, we call that as a standalone asset or a liability. Or in some cases, I am interested in not selling one asset or one liability. I am interested in transferring a group of assets or liabilities. It is the choice of the transferor. What is he transferring to determine the fair value? So we call these particular scenarios as a unit of account. It could be either a standalone item or it could be a group of assets or liabilities. It could be a group of assets and or liabilities. So unit of account refers to the level at which an asset or a liability is aggregated or disaggregated in an Ind AS for recognition and or measurement purposes. For example, when I talk about fair valuation of equity instruments, will it be for a standalone asset or a group of assets? What do you think? When I want to do the fair valuation of equity instruments, will I do it for a group or will I do it script wise? Bolo?
It's for group.
Not for a group. Now you have to do it. Suppose I'm holding equity shares in Larsen and Toubro, TCS, Infosys, Bharat Electronics. These four companies I am holding equity instruments. Now I don't want to sell, but financial instruments requires me to do a fair valuation. So will I do for all the four put together or will I find out the quoted price of L&T, arrive at the value, quoted price of TCS, arrive at the value, quoted price of Infosys, arrive at the value, quoted price of Bharat Electronics, arrive at the value. So in which method you would adopt? You would total up and then see what is the fair value, or you would do a line by line fair valuation?
Line by line fair.
Yes. That means what? That means each of this script or each of this script doesn't matter. You don't need Ind AS 109. Don't worry. Okay. So each of this script, you will be valuing it as a single line item. So unit of account in this case is a standalone asset or a liability. Is it clear? Is it clear? Leela, Sanjay, is it clear?
Clear.
Clear? Because you have measured the value of Infosys share 1, measured the value of TCS share 1, measured the value of L&T share 1. So एक asset का आप value ढूंढ रहे हो. You are doing the valuation for each individual asset. So that is a standalone asset. That is a standalone asset. All right. Sometimes you are not interested in standalone asset. You are interested in the value of the division as a whole. In that case, you will apply the valuation principles for the division as a whole instead of nitpicking one by one. Is it okay? Like, for example, the gold loan portfolio. This gold loan portfolio, you will determine the value for the entire business as a whole, which comprises of many assets, many liabilities, and therefore, that particular aspect is going to be determined on a group of assets and liabilities basis, not individual basis. You will not do a cherry picking. Is it okay? You will go for a group level determination of value. Question arises, which does Ind AS 113 tell to go for standalone or a group of assets or liabilities based valuation? Ind AS 113 does not do that. It is the respective standards which tell you whether I should go for a standalone asset or a liability or for a group based asset or liability. And basis the requirement of that standard, you will come to Ind AS 113 for further valuation. Are we okay with this? Are we okay?
Yes.
Yes. Leela, Bibu?
Yes.
All right. Now, go through these two questions. Go through these two examples. Let me know if you have any doubts. The first example is what we discussed, correct?
Yes.
The second example is what we discussed from an SBI loan portfolio, but second example in this case is talking about a cash generating unit.
Yes, we have done it in Ind AS 36.
In AS 36. So both examples clear? Bibhu, Leela, yes?
Yes, sir. Both are clear.
Both clear? Leela?
Clear.
Clear? It's exactly the same. So we proceed further. Market participant also we spoke about, computed from the perspective of market participant. Who are market participants? The parties which eventually transact the assets or liabilities. Characteristics, they should be independent, not a related party. If they are related, it should be at arm's length price. It has put in this as a matter of principle, but really speaking, generally between related parties, transactions थोड़ा सा ऊपर नीचे होता है. Yes, it's natural. Okay, there is nothing to be overtly suspicious about this. Okay, you look at a company like Reliance, more than 120 subsidiaries it is having, and it is entering into a transaction with all the subsidiaries. Do you think it is something very suspicious about? Do you think it is something very suspicious or something which is normal in the course of business? What do you think?
Normal.
It is okay. It's not something to be overtly suspicious. इतने सारे related parties है. होंगे ना, because that is one of the biggest conglomerates in the world. It will have 10,000 subsidiaries. Doesn't matter. It will have huge number of subsidiaries. There will be transaction between the parent and the subsidiary. That is also fine. No issues. Okay. The key aspect for us is we have to report. Okay. Generally, they make the endeavor to do it at arm's length. If related parties have done similar transaction on arm's length price, you can consider those parties also. So that is why this is put in place. Okay. Should not be under any stress or force. All parties should have reasonable and sufficient information about the transactions. So a well-informed party, which is very well aware of the scenario, which is very well aware of the asset, the liability, the market scenarios, and no stress. Nobody is putting a gun to your head to enter into the transaction. So in all these cases, when these conditions are fulfilled, that becomes your market participant. Okay, all right. Go through this particular example. Yes. go through this particular example.
There is asset specific
Yes.
restriction.
So asset specific means it is considering the characteristics of the asset,
Yes,
right?
yes, that would be
So there
taken
is
into
a legal
consideration.
restriction, which is fair. As an owner also, you will be subjected to it. As a market participant also, you will be subjected to it. So very simple. Suppose I have a land which is under a green zone. Orchard land जिसको बोलते हैं. I don't know what you call it in your respective places. या फिर बोलो agricultural land. Okay. Agricultural land comes with a restriction not to construct anything upon it. Yes or no?
Yes, my
On
point
an
was,
agricultural land, you can only do a farming activity and छोटा सा एक farmhouse रख सकते हो. You can keep one small farmhouse. That also they have lot of restrictions. It should be so much size. It could be so much land. I mean, so much FAR. Which should use only in such and such place. And they also give what should be there in that particular place. Ground floor, you should have one living room plus you can have one kitchen or something, and up maximum one floor. And all that restrictions are there. Is it specific to you as owner of the land, or is it applicable to anybody who is going to buy that land immediately?
yes, it is applicable to anybody.
Yes. So that
And
is why what this example is telling is legal restrictions pertaining to an asset or a liability will be considered while determining the fair value, because it is common across all the people, right?
Right, my point was, I was talking about this after 10 years.
Yes.
Now it wants to evaluate its fair value, so it has to take these conditions into consideration.
Yes.
Okay.
That is fine. So after 10 years, see, the fair value of land will include this restriction because it is an asset related restrictions. Any buyer will need to take over with similar restriction to use the land for the next 10 years. Okay. So now, very simple. Suppose in this case, there is a restriction to use it for commercial purposes. Okay. So today I sell the land, and commercial usage can be exploited only after 10 years. So the fair value of land today and the fair value of land in the 9th year, will it be same or will it be different?
Fair value will be same in the 9th year also.
Are you sure fair value will be the same in the 9th year? Because today my money gets blocked without a chance to develop for 10 years. Whereas in the 9th year, my money gets blocked for not developing only for 1 year. The second year, I can develop a commercial establishment on that plot of land. Yes or no?
Yes, but the restrictions would be there. So
Restriction will
because
be
of
there,
that, I
no
was saying
doubt. Restriction will be there. So for example, just hypothetically, commercial land is, let us suppose, valued at 3 lakh per square meter. This valuation will never come to you because you are having a restriction to use it for commercial purposes. Year one, suppose the fair value of this land is going to be, suppose, 75,000 per square meter. Year 9. Can I say that year 9 will be 75,000 or will be more than 75,000?
it will be definitely more than 75,000,
But it will
not to
be
that extent.
less than 3 lakhs. That I agree with you. Yes. So maybe 75,000 will become, let us say hypothetically, 2 lakh per square meter. Right? Yes or no?
Yes, yes.
Because within the next 1 year only, you can start commercial development on that land. So you are going to get your returns faster. In the earlier case, your returns would come after a period of 1 decade. So therefore, that would be something which would remain on blockage for a period of 10 years. That is why the valuation is lower. Whereas now year 9, it could be 2 lakh or even 2 lakh 50,000. But it won't be 3 lakhs because you still do not have a commercial usage right. Are we okay with this?
Yes.
Yes. So you will evaluate whether the restriction is commonly imposed, how useful it will be after end of 10 years, definitely. Whether any alternative use which may be considered normally by a participant for similar kind of deals, how liquid the sale of land will be with such restrictions, comparing the price with similar kind of land without restrictions to arrive at the fair value. Are we okay with this?
Yes.
Yes. All right. So with that, I think we conclude the discussions on the fair value definition. Okay. And now we come to the next key part, that is appropriate market. Okay. Sir, we said that it is a price. It is an exit price that I would receive if I sell the asset or pay if I were to transfer a liability in an orderly transaction between market participants at the measurement date. Everything is fine. But बेचेंगे किधर? Where is the exit price? Where do I realize the exit price? आप बोल रहे हो मार्केट पार्टिसिपेंट, तो ये मार्केट पार्टिसिपेंट मिलेगा कहां? Where will I get this market participant? Very simple. This market participant you will get in the market only ना, और किधर मिलेगा? Today the marketplace is at your fingertips. Today you want to buy something, you just log into your Amazon account, and what is Amazon account? It is nothing but a marketplace. Yes or no?
Yes.
तो मार्केट पार्टिसिपेंट कहां मिलेगा? सर मार्केट पार्टिसिपेंट मार्केट में मिलेगा, और कहां मिलेगा? वेयर विल यू फाइंड हिम? यू विल फाइंड हिम इन द मार्केट. कौन सा मार्केट सर? There is one vegetable market here, there is an online market on Amazon, there is Make My Trip. Which market? So our standard also is very clear, appropriate market. Okay, no more confusion. It just tells you will find the market participant in the appropriate market, and then it goes to describe what is an appropriate market. Okay, so now the next concept that we are going to discuss is appropriate market. Appropriate market. See, to sell an asset or transfer a liability, you need a market participant. This market participant you will find in a market. Which market? Appropriate market. And now the standard tells, you will ask, sir, ye koi baat thodi hui, what is appropriate market? Appropriate markets are categorized into two types. First one is principal market. The second one is most advantageous market. Two types of markets: principal market, most advantageous market. Okay. In either of these two markets, you will find your market participant. You will find your market participant. Sir, hota kya hai? What are these two markets? Principal market. What is principal market? Okay. Sir, principal market is that market which has the highest number of buyers, highest number of sellers, highest number of activities compared to any other market for the commodity in question. So, highest number of buyers, highest number of sellers, highest number of activities compared to any other market for the commodity in question. Are you okay with this? Did you understand? Highest buyer, highest seller, highest activities. Yes? Yes or no? Acha. Sir, example though, example. Diamonds, pata hai? Do I know diamonds? Yes. Diamond, there is a new market which is opened, right?
Surat?
Surat wala. Yes. Surat Diamond Bourse. Do you agree?
Yes.
Yes. All right. 1 second. Yes. Surat Diamond Bourse is the biggest diamond market in the world, in India. Yes.
Yes.
Diamond cutting, diamond polishing, diamond purchasing, diamond handling. Thousands and lakhs of deals are struck in this particular place. Yes. Have you seen that diamond market? Yes. At least the visuals of it. Yeah. It's a huge, huge marketplace. That particular place, Surat Diamond Bourse, that becomes your principal marketplace for diamonds. That becomes your principal marketplace for diamonds. Sir, why do you say highest number of buyer, highest number of seller, highest number of activities? You remember in economics, there was a topic you would study called types of markets. Yaad hai? Yes, monopoly, duopoly, oligopoly, perfect competition. You remember?
Yes.
In that, there was something known as perfect competition. What was
Yes.
perfect competition? A scenario
Market
where
participants are
you,
knowledgeable.
yes, where you have large number of buyers, large number of sellers, and knowledgeable buyers and knowledgeable sellers, such that no individual or group of buyers or sellers can individually or collectively influence the price of the commodity. Do you remember this definition of a perfect competition?
Yes.
Yes. Leela, Bibu, do you recollect this?
Yes, sir.
Yes. That means what? In a perfect competition scenario, can your prices be arbitrary, or will they always tend towards a particular fair value?
Tend towards the particular fair
They
value.
will always tend. जब तक आपके प्राइसिंग में वेरिएशन है कंपेयर टू योर फेलो सेलर और फेलो बायर, you will be unable to make a deal. You will be unable to sell your product. You have to bring it to the fair value. And the customer also The moment he sees a different pricing that is happening, he will go to that price which suits him the best. So these two opposite forces, customer will look for more value, lower price. Seller will look for giving a higher price. Ultimately, these two opposite forces will come to a point of equilibrium. And that equilibrium cannot be disturbed by a single buyer or seller. Do you agree to this? Yes.
Yes. Yes.
And that is a perfect competition. This equilibrium is the price where the buyer is also amenable to buy and the seller also is amenable to sell. That equilibrium actually becomes your basis for determining the fair value. Are you okay with this? Yes or no?
Yes. Yes.
Which is why we talk about principal market, because in a principal market, bias virtually gets eliminated. Competition and cartelization effectively gets cancelled out. It is a fair platform for every buyer and every seller in the largest marketplace. And therefore, prices tend to move towards an equilibrium. Prices tend to move towards an equilibrium. Now, Surat Diamond Bourse is the biggest market. But tell me one thing. Does it mean no other marketplace exists?
No, that doesn't mean any other market does not exist. There would be other markets also. Yes.
Correct. Absolutely right. Suppose you want to buy diamonds. हर कोई सूरत थोड़े ने जाके खरीदेगा. Nobody will every time go to Surat and buy a diamond, right? The price of going to Surat and coming back with a diamond, in that price, thoda sa premium deke you can buy from your local jeweler, right? Like for example, Tatas have an exclusive diamond store. PNG and all these jewelers also have a diamond store. You may be thinking, sir, ka apna ek jewelry ka shop chal raha hai. But that is how it is. Diamonds are having a market in each respective city, in each respective shop. Markets are there. No doubt on the markets. But will your diamond have a true price? Answer is no. I'm not saying it will go way beyond, but answer is the true price for the diamond that you are buying will be available only in one place. And what is that one place today? Today that one place is the Surat Diamond Bourse. Are you able to understand? Yes?
Yes. Yes.
Because more the buyer, more the sellers in a particular space, price tends to become true. Price tends to become true. Are you having any doubts now? Are you having any doubts now? Yes or no?
No.
No? Leela, Sanjay, Bibhu, is it clear?
Clear, sir.
Clear? So principal market is the market where you have maximum number of buyers, maximum number of sellers, maximum number of activities as compared to any other market for the commodity in question. The point is this now. Sir, does it mean principal market sabka hota hai? Answer is no. Generally, most of the commodities do not have a principal market. Sale of agricultural produce, which is your principal market? Yes, which is your principal market?
The mandis.
Which one?
Mandi, calling it mandi.
But that mandi will be one in Delhi. Delhi में भी एक गुड़गांव में होगा शायद. There will be one in the capital region of Delhi. There will be one in Faridabad, one in Noida. Mandi will also be there in say Punjab. Mandi will also be there in Madhya Pradesh, Uttar Pradesh. Every place will have its own mandis, yes or no?
Yes.
So therefore, will I ever have a principal market for agricultural produce? Answer is no.
No.
It won't be possible. Mandis will be there in each and every state. Each and every state will have this particular place. A mandi will be there in Delhi, a mandi will be there in Bombay, Bangalore. Why all this? Even in a tier 2 and tier 3 city also, you will have mandis existing. So therefore, the chance of having a principal market for agricultural produce can never exist, right? In fact, for most of your products, a principal market is not going to be available. It's not going to be available. Acha. I started off the question today with, suppose I have a script and I want to do the fair valuation. कौन सा valuation लेंगे? Will I take BSC valuation? Will I take NSC valuation? Because the price difference is going to be a couple of paise here and there. कौन सा price लोगे? So now you tell me, do shares have a principal market? Do shares have a principal market?
Yes.
Which one?
BSc, NSc.
Principal market generally कोई एक होगा ना?
Okay. Yes.
Yes. So the point is this. Initially, which is older? BSc is older, NSC is older.
NSc.
BSc is older. BSc is older. NSC is a new entrant. Okay. Definitely, but I have to take from this that NSC has picked up a lot compared to BSc. Okay. BSc is one of the oldest stock exchanges. In fact, I think it is the oldest. BSc बहुत सालों से है. Yes. BSc earlier had huge number of transactions. All buy, sell, manual era se chalta tha, when people used to shout on the shop floor. Then they came to your trading, and then they came to paper. Now they have come to online. They have slowly, steadily, they have graduated, right? So therefore, essentially your Bombay Stock Exchange could be a principal market for your scripts. Now, you also have the National Stock Exchange. You also have the National Stock Exchange. Earlier, transactions in NSC were lower compared to BSc. But now, with the passage of time, NSC also is coming equal to Bombay Stock Exchange pricing. Are we okay with this?
Yes.
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 So therefore, again, which becomes your principal market? Look at where the transactions have happened the most, in BSc or NSC, and then basis that we can come to a conclusion. Are we okay with this? Yes.
Yes.
So principal market, do I have any doubts? No doubts. All clear.
Clear.
All right. Now, do you want a break, or should I complete most advantageous market and then we go for a break?
Should complete sir most advantageous.
ठीक है. तो जैसे मैंने कहा, प्रिंसिपल मार्केट इज नॉट गोइंग टू बी देयर फॉर मोस्ट कमोडिटीज. कहां कहां ढूंढो? व्हीकल्स. डू व्हीकल्स हैव अ प्रिंसिपल मार्केट? यू वांट टू बाय अ मोटर कार. इज देयर अ प्रिंसिपल मार्केट?
No.
नहीं. हर एक शहर में डीलरशिप होगा. There would be a dealership in every state, in every city, right? Every city will have a dealership. For example, in a place like Uttar Pradesh, you will have a dealership in Varanasi, you will have a dealership in Lucknow, you will have a dealership in, let us assume, Meerut or some such place. Tamil Nadu, you will have something in Chennai, you will have something in Kanchipuram, you will have something in Salem, you will have something in Coimbatore, right? So each dealership will be present in each and every city. There cannot be a principal market. So in most of the scenarios, there is no principal market. We turn to something known as the most advantageous market. As a seller, see, why I always talk from seller perspective, because fair value is based on entry price or exit price.
Exit price.
exit price. So you want to sell an asset. You want to sell an asset or transfer a liability. So when I want to sell an asset, I will obviously talk from the perspective of the seller. And seller, where does he want to sell his product? Obviously, he will want to sell his product in the most advantageous market. He will want to sell his product in the most advantageous market. What do you mean by most advantageous market? It is the market where all of this is there in the presentation. You don't have to write down anything, just listen. Okay. Market where highest price is available. Market where highest price is available. Okay. I will modify this definition with time. Okay. Abhi ke liye, you just think it of as a market where highest price is available. Okay. ठीक. Now, let us suppose you are in the business of mangoes, right? I mean, you have your own mango orchard. You grow the mangoes and then you sell it. Okay. Now, there are two markets, local market and export market. Okay. Now, your local market, 1 second. Price. In the local market, the price is, let us suppose, 1000 per dozen, per 12 pieces, okay, per dozen. In the export market, it is worth 1500. It is worth 1500. Which becomes the most advantageous market now?
Export price.
Export. Leela, Bibhu, yes?
Yes.
Yes, sir.
Okay. But now you tell me, export market, do you think I have grown the mangoes, very nice, ripe Ratnagiri Alfonso mangoes. Okay. You have it in your basket. Can you just say 1500 is the fair value of these mangoes? They are just still in a basket under your tree. Can you say 1500 is the worth of these mangoes? Yes?
No.
No. If you say 1500, people will tell what, people will tell, forget it, I'm not buying from you. The market is selling to me for 1000 rupees. I will go and buy from there. Yes or no? Yes? Bolo.
Yes.
Yes.
That's what they will say, right? So, what should you do to realize 1500? You should transport these mangoes from India to, let us suppose, the United States. Yes or no? Bolo. Yes. Sitting
Yes.
here
Yes.
in India, you will not be able to realize 1500 because no Indian fellow will pay 1500 when a product is being available for 1000 rupees. Yes or no?
Yes.
So therefore, you have to move your goods from your orchard to the United States. So what do we call that? Transport cost. Yes or no? Bolo. Yes or no?
Yes.
Yes, sir.
So let us suppose, and obviously local also I will have some transport cost. Yes. From my orchard, I have to move this to the marketplace, right? I cannot expect customers to come to my orchard and buy the fruit. I have to send the fruit from my orchard to the marketplace. Yes or no? उसके लिए भी transport cost लगेगा. Correct?
Yes. Correct.
So let us suppose for local the transport cost is 100. For export, the transport cost is 700. It has to go from here, it has to go on a flight. From the flight, it will reach the US. There, they will do the checking. They will remove some items saying that these are not permitted. And then they will get, and then they are going to get the access to those mangoes, right? So therefore, export transportation cost is worth 700. Any doubt so far?
Clear.
Clear? Acha. And now, itne mein ho gaya. Do you think it is over here or anything else is required? Think about it. Think, suppose you are selling your mangoes, right? You are selling the mangoes. Do you think reaching the mandi means your product will be sold? Yes. How many of you?
I have a question. Why are we saying then that this is price? It should be the cost, then transport.
No. This is the selling price, na? Because I
Selling
told
price
you
would
we're
include
starting
transport
from
also.
which one?
Selling price would also include transport cost.
No. See, the price is the price which is available in the marketplace, right?
And these are the transaction costs like we have to incur to sell these.
Correct. So, Sanjay,
Yes.
your selling price will be realized in the marketplace. But your product is there in the orchard. Yes or no?
Yes. So are we adding this transport cost to this
Not
price?
adding. Forget
Okay.
adding and all. Right now, just analyze the cost, add less, all of that. We will come to that later. Okay.
Okay.
Right now, from your orchard, you have to move these goods into your marketplace. Acha, move kar liya. I have 100 baskets of mangoes. I moved 100 baskets of mangoes from my orchard to the marketplace. Move ho gaya. Does it mean it is sold?
No.
No. What you have to do next?
To sell, compete with others.
आप अकेले नहीं बेच सकते ना. You cannot sell 100 baskets of mangoes. What you will do? You will appoint middlemen. You will sell half a basket to X, half a basket to Y, another 1/4 basket to Z, another 1/4 basket to A. ऐसे करते करते you will make 10 baskets into manageable sizes of outputs to each individual vendors. Yes or no? And then those vendors will reach to the ultimate end customer. Correct?
Yes.
But to sell to the end customer, do you think that fellow who is the middleman will do it for free?
No, he will obviously charge us.
He will keep his margin. He will keep his margin. Yes or no? Polo?
Yes. Yes.
All right. Do you think similar thing will be done in the United States?
Yes.
Obviously, the moment it reaches the port in the United States, does it mean you have realized 1500? Answer is no. By 1500 realize karne ke liye, from the port, it must go to the shops. Do you think customer will come to the port and say, oh, we got mangoes from India, kharido, aa jao? It doesn't happen like that. It has to reach the designated marketplace, and that is United States. There will be 10,000 procedures before it reaches the marketplace. They will be inspected. Products will be quarantined if they are found to have some germs or pathogens, or they will be sent back to kuch bhi ho sakta hai, right? Some batches will come back to India, or they will be destroyed then and there only. Okay, so whatever they have to do, they have to do. Okay. But for carrying out activity after reaching the port to making it available in the marketplace, it is similar like what the Mandi fellow does here. Yes or no?
Yes.
He will keep something to usko hum log bolte hain, we call that as transaction charges. Yes or no? We call that as transaction charges. Correct? All right. You call it transaction charges or by any other name. You call it as dealer margin. You call it as brokerage. You call it as commission. It is just a different name. It is just a different name. It is not carrying any difference. आप broker margin बोलो, sorry, dealer's margin bolo, or you call it as brokerage, or you call it as commission. What is the difference? What is the difference? It is
Nothing.
basically a cost that you pay to the interim guy to sell the product. Volkswagen. Volkswagen India, or take for example, Maruti. Maruti manufactures its cars in Manesar, which is near Gurgaon, right? They have a huge plant. Do you think Maruti from Manesar can sell individually cars to all the people, all the customers?
No, not
It has
possible.
to appoint. It has to appoint its dealers, right? So there will be dealers with big showrooms. They will have servicing facilities. They will get the cars from Maruti and sell to the end customer. Dealer को क्या मिलता है? Dealer will get a dealer's margin. थोड़ा पॉलिश्ड लैंग्वेज सर हम ब्रोकरेज सुनना पसंद नहीं करते बिकॉज वी आर डीलिंग इन ऑटोमोबाइल्स सो वी गेट व्हाट इज नोन एज अ डीलर्स मार्जिन सर आवर मार्जिन इज वेरी लेस they will feel hesitant to use the word brokerage because they will say I'm a broker that's what they will talk but end result तो वही है for selling you are getting something आप brokerage बोलो dealer margin बोलो commission बोलो agency charges बोलो you call it whatever name it is essentially a cost to facilitate the sale transaction yes or no so we call it as transaction charges yes all right
Yes.
so let us suppose the transaction charges in India is 400 and the transaction charges in US is 150. I'm just making this up because I want us to understand some concepts. Okay. And after understanding this concept, then I will take up any queries that you have. Okay. Now, do I have anything else left after this? Now, where your goods have reached after paying transaction charges, after paying transportation cost, the goods have reached where?
Place where we can now sell to the
The
end
goods
customer.
have reached the place where they will actually be sold. That is the marketplace. And the customers will now pay 1,000 rupees, 1,500 rupees. Will they pay you? Answer is no. They will pay to that guy. That guy will pay to you. Correct? Yes
Correct.
or no?
Yes.
अच्छा तो एक बात बताओ in reality are you actually realizing 1,000 or is it less than 1,000?
Yeah, less than 1,000.
Far less than 1,000. Far less than 1,000. Because 1,500 is the price in the market. But you have to reach the market, right? So you incur transportation cost. Then from the market, it has to reach the customer. You incur transaction cost. Uske baad, the goods are sold to the customer and then you get it back. So tell me, your realization will be an addition of these costs or a subtraction of these costs?
Subtraction.
Subtraction. So 1,000 minus 100 minus 400. This gives you how much?
500.
1,000. Yeah, this gives you 500. And 1,500 minus 700 minus 150. How much this
650.
gives you?
650.
650. Yes. NP is not net profit. NP is net proceeds. NP is net proceeds. Now understand. The standard tells your most advantageous market is that market where the net proceeds are maximized, So in this case, Where are your net proceeds maximized? In
Export.
And therefore export market becomes your most advantageous market, because ultimately as a seller it really doesn't matter what is my transportation cost and transaction cost. I am interested in arriving at a value which maximizes my net proceeds. I am interested in selling in that market. So what Ind AS 113 seeks to do is, if this was the earlier regime, you know what would be the situation? They would say, take lower of the two. Instead of most advantageous market, it would be least advantageous market. क्यों? Sir, हम conservative हैं. Sir, we are conservative. Conservatism is running in our blood. Conservatism is running in our thoughts. Conservatism is running everywhere. I see only conservatism, right? So conservatism would require you to take the least advantageous market. Sir, we should not show unrealized profit and be prepared for all losses. Ind AS 113 tells nothing doing. You are a rational player. We assume that you have business sense, and we assume that you intend to sell your product in that location where your proceeds get maximized. Sir, profit वो बात की बात है. Ultimately, you are all profitable entities, right? Profit-making entities. So why hesitate for booking something like a reasonable amount instead of going for least valuations? Yes or no? Yes.
Yes.
So therefore, your most advantageous market in our example remains the export market. Remains as export market. Okay. And now, when I talk about transport cost is basically, what is your transport cost doing? It is moving your inventory from the orchard to the marketplace. Yes or no?
Yes.
That means the characteristic of that asset is changing. Which characteristic? The geographical location characteristic of that asset is getting changed. Yes or no?
Yes.
And therefore, you are considering it. So my point in discussing this is, transport cost is only a name which is given. Any cost which alters the nature of asset before making it available for sale, you will have to consider at par with transportation cost. Do you understand this? Yes?
Yes.
Any cost which is required to be incurred to change the characteristic of the asset to make it reach the marketplace, that cost will be deducted. Are we able to follow?
Yes. Yes.
Yes. So transportation is just a name, just like transaction cost is just a name. Transaction cost is a broad umbrella for transaction specific charges, brokerage bolo, or you call it as uh, facilitation fees, or you call it as dealer's margin, commission. जो बोलना है बोलो. End of the day, it is a cost to help your goods get sold to the end customer. It is a transaction. It is a transaction specific cost. Are you able to understand now?
Yes. Yes.
Yes?
Yes.
All right. So therefore, your most advantageous market is of two types. One is principal market, one is most advantageous market. For the purposes of determining the fair value, which market do I have to consider? Why sir आप बार-बार market क्यों बोल रहे हो? Because it is exit price. Exit price is the price to sell an asset or transfer a liability. So sell an asset, where will I sell an asset? In the appropriate market. In the appropriate market. So whenever I have to determine which market to use first preference goes to principal market. First principal goes to principal market. Are we okay with this? Yes.
Yes.
Girls, what is her name? Yeah, Leela, right? Yeah. Are you okay with this?
Yes, sir.
Yes. So first choice will be principal market. If principal market doesn't exist, you then go to most advantageous market. You then go to most advantageous market. Any doubts so far? Anybody has any doubts? Vibhu, Sanjay, Leela,
Clear from me.
clear? Okay. याद
Clear.
रखो, understand, till now we have not mathematically discussed what is fair value. We take a break now. We shall convene around 9:25. We shall convene at 9:25. The last couple of half an hour, we will now see what is fair value. Okay. सब कुछ कर लिया. The platform is set, the foundation is set to now understand what is fair value, and then we shall take this discussion to the next level. Is it okay? Yes.
Yes,
Okay, sir.
okay.
All clear? Okay. So we take a break. We shall convene at 9:25. Okay. All right. Yeah. Right. So we had ended at the appropriate market discussion, where we saw that principal market is your first priority and most advantageous market becomes your second option if the principal market does not exist. What is your most advantageous market? The most advantageous market is that market which maximizes your net proceeds. Net proceeds essentially means the selling price in that particular market minus the costs to make your product or to make your asset saleable in that market, minus any transaction related costs that you would be incurring. So that gives you your net proceeds. That gives you your net proceeds. And finally, when we talk about fair value is therefore going to be equal to price. This will be an estimated price, okay? Because today sitting here, you are estimating that price. So estimated price minus transport cost. This is what is going to be your fair value. This is what is going to be your fair value. So whether it is your principal market, whether it is your most advantageous market, your fair value will be estimated price minus the transport cost. Estimated price is the price in either of those two locations, principal market or most advantageous market. To determine the most advantageous market, you first calculate the net proceeds, arrive at the most advantageous market. Then to calculate the fair value, you will take it as estimated price minus transport cost. Is it okay? Yes. Is it okay?
Yes, okay.
Okay. Sir, question arises, why fair value cannot be equated to estimated selling price? Because today my box of mangoes, I know it is worth 1,500. Why can I not just say that my fair value of the mangoes is 1,500? Because 1,500 is your cost in the orchard. Who will come to buy the goods from the orchard? Who will come to buy the mangoes from the orchard? Today you are saying it is in the basket. Tomorrow you will say the fruit which are lying, which are attached to the tree. Before plucking them only, you will say the value is 1,500. Do you expect the customer to come, climb the tree, bring the fruit, put it in a box, cover it with hay, and then take it back? And he should pay you 1,500 for that? Answer is no. It is your job to bring the goods to the location where they are going to be sold. So that is essentially your transport cost. So bring them to a location where they are getting sold is essentially the cost to make the goods saleable. The cost to make the goods saleable. So any cost which is altering the feature of the asset to make it saleable has to be deducted. So that deduction, we call it as a transportation cost, but essentially it is altering the key features of the particular asset. Are we okay with this? So your fair value is going to be your estimated price minus the transportation cost. So in our example, the fair market value, the most advantageous market is 650, that is your export market. Therefore, fair value is equal to 1,500 minus 700 is equal to 800. Are we okay with this?
Yes.
Are we okay? Yes. All right.
Yes.
And this NP, net proceeds, is also called by another name, NRV, net realizable value. Net realizable value. Are we okay with this?
Yes.
Yes. Any doubt so far, anyone?
No doubt.
All clear? Leela?
Yes.
All right. Now, why don't I reduce the transaction cost in the fair value? That is one more question. Why don't I deduct the transaction cost in determining the fair value? Transaction cost, is it asset or liability specific, or is it a transaction specific cost?
As its name suggests, sir, it's based on transaction specific.
Transaction. See, basically, your goods are grown or there with you, whatever it is. You are taking it to the marketplace. Then, to facilitate the sale, only for that purpose, the middleman is taking the money. Otherwise, it is not in any way altering the feature, the nature, the characteristic of the asset. And therefore, you will not be deducting the transaction charges. Are we okay with this? Yes. Are we okay? So that is why we do not consider it. That is why we do not consider it. Okay, right. So that closes our discussion on the most appropriate market as well as what exactly is fair value. What exactly is fair value? Okay. All right. So now coming back to our presentation, appropriate market, we have seen principal market, which is normally the place where assets, liabilities are being transacted with highest volume, with high level of activities comparing with any other market available for similar transaction. Did we discuss this? Yes. If there is principal market, the price in the market must be used even if there are more advantageous market. Why do they tell this? Why don't they be realistic here?
Because sir, most advantageous in market we have sometime more transport card and transaction card.
Nahin. See what they are saying, even if most advantageous market is there and you will sell it there, in spite of that, if principal market is there, they are saying consider it. That means in principal market, even if your net proceeds are lower than most advantageous market, they are saying consider the principal market. Why is that so? Because it is possible that you are selling in a market where either you are a monopoly or you are a cartel. You are part of a cartel. So you are able to increase the prices artificially. But your goods today are in a market, are in a principal market. Yes, but your goods today are in a principal market, and that principal market cannot have any price, what they call price tinkering facility, which is available, because so many buyers, so many sellers, price will tend towards the fair value. Are we able to understand? Yes. So therefore, even if most advantageous market is there, please take principal market. Okay. Because it is the most liquid market for the asset. Most liquid market for the asset. So this is principal market. Most advantageous, the market which maximizes the amount that would be received, net proceeds. Did we see this? Yes?
Yes.
Yes or no?
Yes.
So asset के लिए maximizes the net proceeds. For liability, minimizes the amount that is to be paid. So net proceeds, we saw price minus transportation cost minus transaction cost. In absence of principal market, this market is used. In absence of principal market, this market is used for fair valuation of assets and liabilities. In many cases, principal market and most advantageous market will be the same. Okay, ठीक है. So that is a generalization. But any doubts so far? Any doubts?
Clear, sir.
I think we have clearly discussed. Okay, I want you to read these two things. Okay, read these two examples. Something which we have already discussed. Okay, just run through it so that you can understand it better.
Yes, got it.
Got it?
Yes.
Leela, Bibhu,
Yes, sir.
same what we have discussed. I think nothing different, right? मैंने सिर्फ उसको थोड़ा नाम लगाया डायमंड में, सूरत डायमंड बोर्स, because when this material was there that time Surat Bors was not yet constructed. Okay, so now I have just added that. All right, and BSc NSc though we have already given. Okay, so both of these are done. All right, key aspects: price. Fair value is the price, so this is the definition. Okay, what is the fair value? It is available price less transportation cost. Have we seen this definition? Yes, we have.
Yes.
What is transaction cost? Like brokerage commission, STT? These are not a feature of an asset, but a characteristic of the transaction. Hence, it would not be appropriate to consider any cost further while assessing the fair values. This also we have discussed. However, they would be considered while ascertaining net proceeds. Did we do this? Yes, we have done this. Net realizable value is fair value less transaction cost, obviously. So NRV is equal to selling price minus transport cost minus transaction cost. So this becomes your fair value minus transaction cost. Yes or no? Yes? Bolo yaar.
Yes.
So again, nothing different from what we have discussed. Transport cost incurred to transport asset from current location to its principal or most advantageous market. These arise from an event that does change a characteristic of an asset, that is its location, and hence it is deducted from available price to arrive at fair value. Okay, all right. Go through this question, this example. Yeah, go through this example.
Yes, got it.
Got it? Leela,
Yes.
did you follow?
Yes, sir.
Yes, all right. Sanjay also, I hope you followed. Okay,
Yes.
all right, fine. So that closes this discussion. Okay, now we come to a very simple question. Okay, just give me a minute. Okay, yeah. An asset is sold in two different active markets at different prices. An entity enters into transactions in both the markets and can access the price in those markets for the asset at the measurement date. In market A, the price that would be received is 26. Price that would be received is 26. Transaction cost is 3. Transportation cost is 2. Transport to transaction 3. In market B, price that would be received is 25. Transaction cost is 1. And cost to transport the asset is 2. You are required to calculate the fair value of the asset if A is the principal market and fair value of the asset if none of the markets is a principal market. Okay, if A is principal, do I need to look at most advantageous market?
No.
Yes, sir. The principal will be the fair value.
Yes, so fair value is equal to 26 minus 2 is equal to 24. Okay, so this is the first part. Fair value of assets. So look at net proceeds 26 minus 2, 24 minus 3, 21. 25 minus 2, 23, 22. Are we okay with this? So what is your most advantageous market now?
B.
B becomes your most advantageous market. Therefore, fair value 23. Are we okay with this?
Yes.
This is answer to part 1, answer to part 2.
Sir, we
Okay.
will only take transaction cost to decide the whether it's most advantageous or not.
हाँ, मतलब आप नेट प्रोसीड्स कैलकुलेट करने के लिए ट्रांजैक्शन कॉस्ट कंसिडर करोगे.
And at the time of considering for fair value, we will take only transport cost, not transaction cost.
Yes, because only transport cost is the cost which is altering the feature of the asset, the characteristic of the asset, right? So that is why you will consider that. Okay.
Okay, sir.
All right, done. Shall we proceed?
Yes.
All right, okay. So this is done. Okay. Now, last question before we take up some MCQs. So that will end the discussions for today. Isha Limited operates in the agriculture sector, and apart from farming activities, it also has a division retailing agricultural vehicles. Retailing means selling agricultural vehicles. It is currently evaluating a proposal involving the sale of the retail division. Is selling the entire retail division and wishes to fair value the inventory for the purpose of sale. 3 markets currently exist for agricultural vehicles within which Isha has transacted regularly. Isha wishes to determine the fair value of 250 identical new vehicles as on 31st March X9. The volumes and prices across the 3 markets are as under. So you have Uttar Pradesh, Punjab and Odisha. Isha wishes to value the vehicles at 3,91,000 as these are the highest net proceeds per vehicle. 4 lakh minus 5,000 minus 4,000. And Uttar Pradesh is the largest market for Isha Limited's vehicles. Isha Limited seeks your advice as to whether his valuation would be acceptable under Ind AS 113 fair value measurement. Okay. So first of all, look at the data. Look at the data. Try to understand what the question is asking. It is asking you to arrive at the fair value. It is asking you to arrive at the fair value. It is operating in all these 3 markets. So now you have to determine the fair value. So tell me, how are you going to arrive at the fair value?
So we will look
have
at the appropriate market first.
Yes. So what
in
is
this-
the appropriate market? I have 3 markets.
First preference
Out
would be
of
the
which
principal
the
market.
highest volume and highest transaction it is in Uttar Pradesh. 10,000.
Highest transaction is where? Bibuji,
It's in Punjab, sir.
it's in Uttar Pradesh, Punjab. Leela, are you there?
Yes, sir.
Yes. Where is the highest number of transactions happening?
Uttar
Total
Pradesh.
volume of vehicles sold in the market. Look at these three data points. In UP, it is 1,75,000. Punjab 9,35,000. Orissa 1,45,000. Which one will you consider?
Punjab.
Punjab,
Punjab.
9,35,000.
What is the statement that they have made here then? Uttar Pradesh is the largest market for Isha's vehicles. What does this statement mean?
I was also thinking about this. Uttar Pradesh is
Yes.
the largest market for Isha's, but we
Yes.
have to take the overall market. I think.
Yes. Isha probably has its location in Uttar Pradesh, and therefore it is selling maximum vehicles that it has in Uttar Pradesh. But your fair value is not entity specific. This is entity specific feature. Yes or no?
Yes, that is entity specific.
This is entity specific feature. You have to ignore this. You have to consider asset specific feature. Asset specific feature means your principal market is Punjab. Your principal market is Punjab. And since that is your principal market, you will have to ignore or exclude discussions on the most advantageous market because you already have a principal market, right?
Yes,
And
that would be the first
therefore,
preference.
once you have a principal market, you will have to go ahead and determine the fair value based on that. Yes.
Yes,
So, what is your fair value?
selling
It would
price
be
minus
380
transportation
minus
cost.
7. 373.
Yes, sale value 3,80,000 minus transport. Again, many students क्या होता है, they see such easy question and हड़बड़ी में क्या करते हैं, they take this as transportation cost. सर ने क्लास में पढ़ाया था transportation पहले आता है, transaction बाद में आता है.
Yes, I
That
did
is
that
a
mistake.
format, right? You read
I
the
did.
headings. Many times students make the mistake. It is unintentional. Okay. But क्या होता है, these unintentional mistakes cost dearly in the exam. Okay. So
I did
3,80,000
that mistake. I did that
minus,
mistake here.
you had done that. Very good. You do the mistake here only. Don't do it in exam. Okay. Yes.
Oh, yeah, now
3,73,000 per vehicle becomes your fair value. So multiplied by 250 vehicles. So 9.325 crores. This is the fair value of the vehicles. Are we okay with this?
yes.
Yes. Leela, did you follow?
Yes, sir. Clear.
Yes.
Very
Clear.
modern, sir.
Okay. So this brings us to a particular stage as far as today's session is concerned. Okay. It has brought us to some level of closure. It has given us an understanding of what you said. What is fair value? We started off with why do I need a separate standard? What is its significance in the Ind AS regime? And from there, we moved on to what exactly do I, uh, uh, what is this objective and scope of 113? And we saw in detail what defines fair value. We saw individually the meaning of the term price. It is an exit price, whether for an asset or a liability. We saw what do you mean by market participants. We saw the discussions around orderly transaction. We saw what does it mean to be a measurement date. And after all these things, we finally discussed around the appropriate market. And with this, we concluded the discussions here and we finally came to fair value determination. Okay, so these are the discussions that we have had, okay, which have given a strong platform for the next session. Okay, so this is a different subtopic altogether. So I will end the discussions here for today, and let us come to our certain MCQs just as a recap of what we have done today. Okay. Is the screen visible, or wait 1 minute? Let me give a different screen for you. Is the screen visible now?
Yes.
Yes, sir.
Okay. Okay, fine. So, okay, questions 2, 3, and 4, it is true and false. Okay. So, वो true and false आया नहीं यहाँ पे. I don't know why it has not come, but that stands for true and false. Okay. So you can take it on that basis. So, okay, start off with question 1. Measurement principles of Ind AS 113 applies to which option? This is what we have discussed today. What do you think? Measurement principle applies to
Share-based payment transaction.
does it apply to share-based payments?
No.
You have done share-based payments. Okay. So don't tell in share-based payments 102. What do you do? Recollect share-based payments. Where do I use fair value? Where do I use fair value?
Share.
Fair value at grant date of stock options. Do you remember?
Yes, sir.
And also in the case of stock appreciation rights, fair value at the end of each reporting date. Yes or no?
Yes, sir.
And the fair value mechanism also was discussed there. Option pricing model is used to calculate. We had discussed, you recollect? Yes, which could be a Black and Scholes model, or it could be a binomial model. I had not discussed the models because that was not required, but do you remember these points that we discussed?
Yes.
Yes, sir.
So basically, the manner of calculating fair value is given in that standard only. It is not given in Ind AS 113. Yes or no? Fair value कैसे निकालेंगे? How am I going to calculate the fair value is discussed in the measurement principles come in Ind AS 102 itself. Those measurement principles do not come here. What comes here is related to disclosures. Okay. So therefore, answer 1, share-based payments, measurement principles of Ind AS 113 will not apply. Ind AS 116, you people have studied leasing?
Yes.
Yes. What happens in leases? Can you briefly tell me?
Yes. We find the this right of use assets and liability.
Yes. How do you find out the lease liability? You take the present value using
Value of
a discounting
cash
rate.
flows. Yes.
What is that discounting rate? which discounting rate should I use? Should I use weighted average cost of capital? Should I use incremental borrowing rate? Should I use bank borrowing rate? Should I use risk-free rate? Which rate should I use under Ind AS 116? That is answered in Ind AS 116. That is not answered in Ind AS 113. Yes, you typically use an incremental rate of borrowing.
Yes, incremental.
Yeah, why? Because
Yes.
you could buy the asset. You chose to lease it out, but you could buy. So that incremental buying which you're doing, what is the borrowing rate applicable for that is what you use for lease liability. Right? That is defined again in Ind AS 116 itself. That is not defined here. Okay. Fourth option, measurement of net realizable value in Ind AS 2. Again, Ind AS 2 NRV, how do we find out? Selling price minus estimated cost to make the sale, right?
Yes, as per
Inventories
Ind AS
or value in use. Value in use is present value for the usage of, for my usage. Okay, I determine the cash flow by using the asset the way I want to use, and then I will determine the value. So it is prescribed in Ind AS 36 itself. It is it is entity specific usage. It is not related to market participant based usage. So therefore 1, 2 and 4, all these three categories, measurements are not covered. Measurement is covered only in the third option. Assets for which recoverable amount is fair value less cost of disposal. So there you see the fair value. That is covered under Ind AS 113. Are we able to follow? Yes? Bolo.
Yes.
If you see this,
So fair value less cost to sell, we use in recoverable amount in impairment of assets.
yes, so now you see this. Is the screen visible? I have come to the presentation. Yes or no? Can you see this non-applicability?
Yes.
Yes,
In
sir.
non-applicability, measurement and disclosure is not applicable for share-based payments because it's covered in 102. Not applicable for leases, it's covered in 116. Not applicable for measurement similar to fair value but which is not fair value. So NRV, right? So all these are not covered. But here only disclosures are not applicable. Measurement is applicable for assets for which recoverable amount is fair value less cost to sell. So here the definition is fair value. That is covered here. Are you able to understand? Yes?
Yes. Yes.
Sure. Everybody, anybody has any doubt? Leela, Bibu, do you have any doubt now? Leela?
Sir,
Clear?
explain once again.
You want me to explain once again?
Sir,
See. 1 second. Ind AS 102. You have fair value, right? Fair value of options at grant date. You remember this? Correct? And you have fair value of SARS at reporting date. Do you remember this? Yes or no?
yes, sir.
How do I calculate this fair value? This is calculated using an option pricing model. Where is this defined? This is defined in Ind AS 102 itself. So the measurement of that option, the value of that option, how it is to be calculated, that is explained in Ind AS 102 itself. They have not told you use, they have not told any formula or anything, but they have given a basis of how to measure the fair value. This is not given in Ind AS 113. Are you okay with this? Yes.
Yes, sir. Yes.
So measurement gets covered there. Okay. Ind AS 116. You remember Ind AS 116? Leela? Yes. Have you studied?
Remembering.
Okay, fine. So Ind AS 116, what you used to do, your lease rentals, every month what you would pay, that would be your cash outflow. You would convert it to present value using using a discounted cash flow method. Your discounted cash flow method would require you to use a discounting factor. That discounting factor would typically be your incremental borrowing rate. Do you kind of recollect?
Yes, sir.
Yes, doesn't matter if you are not able to recollect fully. You will recollect once you revisit what has been taught. So incremental, so this mechanism of calculating the lease liability, where it is discussed in Ind AS 116. Measurement is discussed in 116. It is not discussed in 113. Yes? Is it clear?
Clear.
And then see, Ind AS 2. You people have studied inventory also? Yes? Have you studied inventory?
Yes.
Okay. In inventory, there is something known as NRV.
Yes.
What is NRV? Selling
Net
price
realizable
minus cost to sell.
cost to sell.
कॉस्ट टू सेल में दोनों आते हैं, ट्रांसपोर्ट कॉस्ट प्लस ट्रांजैक्शन कॉस्ट. यस और नो?
Yes.
दोनों आते हैं. Yes or no?
Yes.
So therefore, selling price minus cost to sell, is this fair value or is this NRV? Just today only we saw, no, Leela? Yes.
Yes, yes, sir.
So this measurement appears to be similar to fair value, but it is not fair value. It is NRV. Right? This is one. Second, Ind AS 36. You have studied something known as value in use. What is value in use?
The present value of future cash flows.
Present value of future cash flows. You recollect, Leela?
Yes, sir.
Which cash flows? The cash flows derived from entity's usage of asset. Cash flows by using the asset. Yes or no? Yes?
Yes.
Yes.
So when I'm calculating present value by my use, does it become entity specific value or market specific value?
Entity specific.
Entity.
Will be entity specific.
So, but is fair value entity specific or market specific?
Market is specific.
Market.
That is why this also is excluded, right? All these are excluded for that reason. Any doubt?
No doubts. Clear.
Okay. But the last case, assets for which recoverable amount is fair value less cost to sell. This fair value is what is discussed under Ind AS 113. Are we okay with this? Yes.
Yes, sir.
Yes.
So that is why this is the option. Rest are all not valid options. Okay. Fair enough.
Clear, sir.
Okay. Coming to the next. This is true or false. Okay. So Ayani, I don't know why I had actually sent it. It was there. Okay. Asset or liability measured at fair value shall be a standalone asset or a standalone liability. Is it true or is it false? Unit of account you try to recollect. What did we discuss in unit of account today?
True, sir.
True or false?
True.
Okay. What about Bibhu and Sanjay? Try to recollect today's discussion. Unit of account. I told you, standalone it should be, or it can also be group of assets or liabilities. Yes or no?
Yes, yes.
So therefore, maybe the question should have been worded better. It is not only standalone asset or liability, it can be even a group of asset or a group of liabilities. Yes or no?
Yes, yes.
Leela, did you follow?
Yes, sir.
Maybe the language should have been better by saying should be only standalone asset or liability. Then you
Yes.
could say it is false. Okay.
Yes.
So the
Only
answer is
one
it is
is
false because you can do a fair value measurement even at a group of assets or liabilities level. Okay. Next. When measuring the fair value of an asset, third question, an entity shall consider entity specific characteristics only. Is it true or false?
false,
False.
false.
Leela?
Market
False.
trend.
False. What are you going to consider? Market specific characteristics or asset specific characteristics? Yes or no?
Yes, sir.
Perfect. Next. Ind AS 113 assumes that the transaction takes place in. Look at answers 1, 2, 3, and 4 and tell me which is right. It's just a word play.
It's answer 1.
Answer 1. Anybody else?
Yes, one.
1. Vibhu? Vibhu?
1, sir. 1.
1. That's right. Answer 1 is right. Rest primary market जैसे कोई term we have not studied in 113. Okay.
And neither primary principal, we haven't secondary.
We haven't seen that. Okay. Next, come to the next question. Dash is the market that maximizes the amount that would be received to sell the asset or minimizes the amount after taking into consideration transaction cost and transport cost. So which is this market?
Most
advantageous.
Great. So that is answer 4. That is answer 4. Okay. All right. You can see question 9. Question 9. True or false question. The price used to measure the fair value of the asset or liability shall be adjusted for transaction cost. True or false?
False. It should be transportation cost.
Yes.
We will take only for the measuring the net proceed, but we
Correct.
don't for the fair valuation.
Correct. Leela, are you on the same page?
Yes, sir.
Yes. Very good. Very good. Okay. So with that, I think that concludes our discussion for today. Yes. So some MCQs also done. Okay. All right. So revise whatever has been discussed. And I think we should be on track to complete the session in the next class. Okay. All right. Fine. Thanks.
Yeah, thank you.
See you on Tuesday. Yes.
Thank you.
Thank you. Done? Session concluded? Yes. Have a